The stock market, Forex, and the crypto market went through a rapid rally on Tuesday. However, some assets took a nosedive, despite the exaggerated market response. Overall trends are likely to remain the same. In the middle of the week, investors will get to know more important data on factory inflation and retail sales. The indicators could cement optimism about the completion of the Fed cycle of rate hikes. Still, the data will hardly serve a widely argument against. Tuesday was one of the most successful days of the year for Wall Street. The benchmark stock indexes climbed in sync. The S&P 500 and the Nasdaq closed with the largest intraday gains since April 27. The S&P 500 added 84 points and closed at 4,395 points, or 1.91% up. The major stock indexes sustained their upward trajectory, rising by 0.3 and 0.7%. The S&P 500 is expected to trade in the intraday corridor between 4,480 and 4,540 points. The most optimistic scenario suggests growth to 4,564, but the most pessimistic one supposes a decline to 4,467 points. Wall Street owes its rally to deflation, and yesterday the U.S. Labor Department reported that consumer prices were unchanged in October as Americans cut their spending on gasoline. The core CPI was the lowest in 2 years, and the core CPI grew by 3.2%, below the consensus following a 3.7% increase in September. Softer than expected inflation data convinced investors that the Federal Reserve did not have to pursue its aggressive monetary tightening with the aim of curbing high inflation. Besides, the market forgot hawkish comments by Fed policymakers. According to the FedWatch tool, on Tuesday, U.S. interest rate futures indicated a 65% chance of the first rate cut in May, up from a 34% on a Monday. Yields over 2- and 10-year treasuries dropped by almost 20 points during the sharpest intraday fall since the domestic bank crisis in March. From 11 sectors in the S&P 500, the real estate sector, sensitive to interest rates, surged by 5.3%. The utilities sector jumped by 3.9%. Among separate stocks, shares of Snap Incorporated rallied by 7.5%, Home Depot shares gained 5.4%, and the optimistic sentiment spread over the New York pre-market today. Factory inflation gave fresh impetus to the rally. Producer prices in the United States slipped by 0.5% on a month in October, the highest reading since April 2020. The index was dragged down by a slump in gasoline prices of 15.3%. The annual rate of factory inflation decreased to 1.3% October from a 2.2% in September, supporting the forecast of a decline to 1.9%. Optimism on Wall Street is challenged by steady demand. Retail sales in the United States grew by 0.7% in March, more than the consensus of a 0.3% increase. The data still indicates robust consumer spending despite high consumer prices and borrowing costs. Excluding cars, gasoline, building materials, and food services, retail sales expanded by 0.6%, following growth of 0.9% in September. Analysts had projected a decline by 0.3%. Apart from encouraging deflation evidence, market sentiment could be improved by the political progress. First, the meeting between U.S. President Joe Biden and his Chinese counterpart Xi Jinping is taking place today, and the talks could ease tensions between the top global economies. Second, the House of Representatives passed the bill to avert the government shutdown, backed by legislators from both parties. Last but not least, investors will get to know remarks from some Fed officials. Fed Vice Chair for Supervision Michael Barr and Richmond Fed President Thomas Parkin are due to speak tonight. As for corporate reports, Wall Street will find out corporate earnings by large retailers. Target shares spiked by 14.2% before the opening bell, and the company forecast its profits in the fourth quarter much higher than a Wall Street consensus. As for the currency market, the US dollar index gained ground in light of the fresh reports. Major currencies loosened their strengths, so the US dollar index recovered by 0.3% to trade at 104.30. The baseline intraday outlook for the instrument suggests the corridor between 104.10 and 104.40. Alternatively, the index could decline to 103.80 or increase to 104.48. The explosive response of the currency market to the inflation data was much stronger than expected, and the US dollar index was badly bruised yesterday. It plunged by 1.5%, the weakest level since September. Optimism on the Forex is easy to understand. A steep inflation deceleration without much damage to the labor market is welcome news for investors. Indeed, it confirms the right policy of the Fed Reserve. The market ruled out the scenario of another rate hike from now on, and the US dollar will find it hard to develop a new rally without sharp inflation changes. New data of retail sales provided the US dollar with some support, and hence it rebounded. However, it's not enough to confident growth because experts detected fundamentals of future softening in the Fed's monetary policy. The Canadian dollar strengthened notably on Tuesday on the back of the greenback's plunge, and the loonie managed to assert its strength in the New York session today. The USD CAD pair traded at 1.3681 before the opening bell. The instrument is likely to trade into the corridor between 1.3630 and 1.3719. The soft US dollar helped the loonie to recoup some of its recent losses. The economic calendar for Canada is empty this week, and that's why the loonie will be very sensitive to the fluctuations in the US dollar and oil prices. Next week, the Canadian dollar will find a catalyst from the inflation data. Meanwhile, signs of deflation and an economic slowdown assured investors that the Bank of Canada will maintain interest rates unchanged next time. The crypto market is licking in its wounds after a stunning rally on a Tuesday. Popular crypto assets opened the New York trade mainly in the green. Bitcoin traded 1.4% up at about $36,100. The intraday corridor is determined between $35,780 and $36,300. The exit beyond the borders will either force the token to retest $35,300 or push it up to $36,750. This week, the standoff between the U.S. Securities and Exchange Commission and ETFs could bear some fruit. Two ETFs, namely Nasdaq Bitcoin ETF and Franklin Bitcoin ETF, have the first deadline on November 17, 2023. The second deadline for the Commission to bring its verdict is January 2024. Global X replication for a Bitcoin ETF with the Coinbase, its commanditouring partner, will receive a decision by November 21. And that's all for today. Your feedback is appreciated. Leave your comments and ask any questions. Subscribe to InstaForex TV channel and stay tuned with us, and see you tomorrow.